I just wanted to start off by asking you your thoughts on the broad landscape and what your sort of operating assumption is about how long this is going to last. We have SoftBank saying the Vision Fund is going to lose almost $17 billion this year. Jamie Dimon just came out saying he doesn't expect the economy to reopen um, until summer at the earliest. How long do you think this is going to last, and how is that changing your investing strategy?
Yeah, first and foremost, it's a health pandemic, so we're advising everyone to take the necessary caution. And but there's a high level of uncertainty around when we open up again. So in our world of early stage venture capital, venture-backed startups, the name of the game is preserving cash, and cash is king. So in a period of uncertainty, you really want to preserve the cash that you have on your balance sheet and make it last as long as possible.
So what are you telling your portfolio companies to do right now, whether it's about conserving cash or human capital, and how long are they supposed to prepare for life to be like this?
Yeah, and we've gone through over 100 portfolio companies, board meetings, lots of Zoom calls, sort of really triaging where the portfolio stands. And we really sort of categorize the portfolio into companies that are really exposed, companies that are facing headwinds, and those that actually are seeing an acceleration in their business. And with those three categories, you have sort of companies that are going and doing layoffs, companies that are hiring freezing, and then companies that are actually still hiring. And so, and the companies are really dependent on what business they're in. There are actually some companies that are really thriving in this environment, companies that do work from home or are providing some sort of entertainment. And then there are others that are involved with discretionary spend, like travel and other types of entertainment that requires it in person. And those are companies that need to take some more drastic measures and lay off people because their business has been really hurt.
Every day, the list of tech companies laying off employees is getting longer. Yelp, 25%, Eventbrite, 45%. How much more widespread do you think the layoffs are going to be across the tech ecosystem, and how deep will the cuts be?
I think we're encouraging our companies to do one layoff if they have to, and do it now as they're able to preserve more of that cash that they have today in the light of just uncertainty. And I expect most of that to happen right now as we speak now to the next few weeks. And then I think we'll see a lull in layoffs because you don't want to instill sort of death by 1,000 cuts in your companies. It's jarring enough to do one layoff. To do multiple layoffs is not the way to go, and that's definitely not what we're advising our companies. So I expect layoffs to sort of be in the window right now, and then I would say have a break, and depending on how fast we reopen or not, we may see another wave later, maybe this year. But for now, I'd say we're reaching the end of the decision to do layoffs.
Meantime, there are companies where business is skyrocketing. Slack is one of those companies. You're an early investor in Slack. And I'm curious how much of the new behaviors that we're seeing now will actually last beyond this. Like, will we use Slack as much as we do now when we all go back to work? Same with Zoom. And how does that impact sort of where you might want to place your bets?
Yeah, I think we've been fortunate beneficiary of work from home, the movement as investors in Slack, and we have other companies like Figma, which is a collaborative design software company that allows people to make designs in the browser collaboratively across the globe in teams. We have a company like Loom that has seen, which is an asynchronous video platform that has seen 10x growth in every single metric in the last month. So really, these are current behaviors that I think it may not be what you do 100% of the time, but maybe what you do 80% of the time. And we may just revert to Zoom for a number of meetings that we'd have done in person. Now we'll just do them more efficiently remotely, just because it's actually it's good enough.
Kleiner just raised a $700 million fund. How are you going to be putting that money to work? During the financial crisis, we saw a lot of VCs just sort of doubling down on the darlings or the favorite companies. Will Kleiner do that, or look more for new opportunities?
Yeah, our mantra is always be early, be the first call for founders who want to go and build history-making companies. And our intent is to invest in new companies, new founders going after new opportunities. And if you just think about 2009, and that era produced Uber and Slack and Airbnb and Square in just a 12-month period, and many more amazing companies. So our really what we're after is finding the Ubers and Slacks in 2020 at the earliest stages.
And will there be enough places to park that money? VCs in the last quarter raised more than $20 billion. At the same time, SoftBank is planning to lose $17 billion when it comes to the Vision Fund. Are there going to be enough new opportunities with so many companies shutting down and the economy grinding to a halt?
Yeah, I think this is a great time to be a founder. Just as I mentioned earlier, some amazing companies get created in these downturns, and there'll be more than abundant opportunities to invest in great founders and great companies. We've seen just a barrage of new investment opportunities come across even in the last few weeks. So I think there's never a bad time to start a technology company, and especially in times like this where the cost of starting something is so low with all the resources that we have at our disposal that didn't exist even a decade ago.
You've taken over daily management of Kleiner Perkins from John Doerr, and I'm wondering how the coronavirus has changed that, or if it's changing any of the plans that were already in place.
Well, we have moved very quickly to work from home. I think, having the benefit of having a China team, we saw what was going on there. And I think, kudos to our technology team and our operations team that allowed us very rapidly to move from work from home, I would say, at the beginning of March, actually. And so now it's pretty awesome to do all hands weekly on Mondays and do weekly virtual lunches. There's a sense of connection through Slack channels. We have the work from home channel. And so it's important to continue to keep the authentic relationships we all have with each other that we have in human capacity, to do that now remotely and distributed.
Kleiner is a sort of storied firm with high highs and low lows and a long history. The new Kleiner is evolving with you. What does that look like to you? What do you want the firm to stand for and to be?
Yeah, I think, we actually have a mission and a set of values and ethos that we live by, really. We have an internal set of values, really, which revolves around being one team, one dream. And our dream is to be the first call for founders who want to make history. And we want to serve those founders with humility and empathy and a strong moral compass. But we also still want to win and be part of those history-making companies.
I have to ask this question. I always have to ask this question. You said 3 years ago that hiring a woman partner would be a priority. Still hasn't happened. I know there are some, women principals at the firm. What's the holdup? When are we going to see this happen?
Yeah, we have some incredible principals in Monica Desai and Annie Weiss, who have just been promoted, actually. And we're constantly on the lookout, and we will find that person.
So how long are you expecting this unfortunate period that we're in right now and the pandemic to last? I mean, what are you preparing for? Stuart Butterfield was on the show. He said workers could be home for 6 more months, possibly.
Yeah, I think we've adjusted to that new reality of we may be in this mode for the next, for this year at least, and have operating that way at Kleiner Perkins and advising our companies to operate the same way. Because we don't have the answers. We don't know when a vaccine will come. We don't know when we will be able to test everyone. So with that uncertainty, you have to expect to operate under the worst case scenario. And adjust to this new normal and conduct business this way, which I think most of our companies are doing, and the ones who are doing it the best are actually thriving.
All right. Just last question then. In terms of investing strategy and remote technologies, work from home technologies, I mean, what are some of the new opportunities that you see, just given how we've had this massive shift in how we get our job done, and we're still getting our jobs done. Sometimes kids interrupt us and it doesn't go exactly as planned, but we're seeing how a different way of life could be.
Yeah, one example or a couple examples is, we have a company called Cameo that's providing entertainment and joy to people's lives by connecting celebrities with people and doing messages and heartwarming messages Getting something from Snoop Dogg would make my day, and you can do that with Cameo. Or if you think about what the pandemic has done in terms of us not wanting to touch anything, we have a company called Proxy that does access control for buildings that will sort of enable this sort of touchless office. This remote work that we're doing, has sort of also mental impact or on our emotional well-being. And so we have companies like Modern Health that provide mental health services, and they're doing it for free for healthcare workers right now, but it's really meant to be as a benefit to employers to offer to their employees who now operate in this new world.